Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey there.
How are you, my man? How's everything going?
Good. How are you, Felix?
Pretty good.
I'm saying I'm good, but I'm not really. I have some problems and I need some
frustrated.
Help.
Okay, frustrated. Go ahead. What's up?
Yeah. Okay, so the thing that's up is I've been following this WallStreetBets like all day, every day. I'm not in on the action, but for fun, I bought a Nokia call, $5 call, I think.
Okay.
And it from 79, so I just bought a one lot. It went up to 486.
Okay.
And I thought, oh yeah, this is gonna go to the moon, blah blah blah. I bought into the story a little bit, and
where is it right now?
I'm breaking even, barely breaking even. I didn't get out of it.
Okay.
And it's like it's starting to get in my head. So, do you have any tips?
Yeah, like, sell it.
What I should sell it? Yeah.
Let's first things first. Well, I guess there's a lot of this going on, right? Things you can't get caught up in the Wall Street bets where they're holding forever. That's one way to play the game. I would advise that unless you really believe that that's the game you want to play, then don't play that game. If you took an option that went from $79 to $400, I mean, I would have told you to sell at $200. You held it at $3. You asked me, I would say sell it at $300. So, it's important. It's important that you look. It's luckily it's $79 and not $7,900. So you learn your lesson. But the point is that, to play this game, I want you must be taking as things go. It goes in your favor. So let's just take a look let's look at my screen for a second. So I'm looking, do you see my screen?
Yes.
Okay. So what do you notice on this screen? What do you notice? Which ones do you have? The February's?
Yes. 5? February 5.
No, you had that.
Feb 5. Yep.
February 5s?
Yep.
Okay. Wow. And you took this to $4. Oh, incredible. Now it's $46.86. So, okay, let's just take a look at what's happening here. First of all, when you bought it, I suspect that the implied volatility was pretty high. All right. Actually, you know what? Yeah, I think you bought it early. We were talking about it before it moved up a lot. So it wasn't that high. So you paid 79 cents and you bought these, and you get the earnings. But look at what they've done. Just look at the left side of that of the board where the expiration is. Look at the changes in the at-the-money implied volatility in each strike. Do you see that? Minus 355, minus 267, minus. Okay, you're going to see that across the board. The way I think about it is, the bees at the end of the summer. The bees at the end of the summer, they start attacking you. At least in New York, they start attacking you by the poolside, and they're swarming at you. No matter how much you swat them, they're attacking you. Well, Citadel's that beat. They're not giving up here. They probably lost a decent amount of money on these short positions. Probably, I would say maybe. And or if they didn't, they're just getting hyper aggressive here because it's the moves in the implied volatility is so it's so large. This is how they make. And again, I would advise everyone to go watch that Robinhood. The Robinhood video that we made and how you actually lose by trading against these guys. But they are getting so aggressive in not only is the bid offer widening. When you bought these, the bid offer was not 46.86. It was like 77 cents at 79 cents. Okay, exactly. Fine, I'll buy 79 cents. Now, when you want to get out, where do you sell them? The bid offer is 40 cents wide on the 5s. So they're making, they basically, and it goes to the whole GME story. They've basically put Robinhood over the whatever you want to call it, but they I don't want to say it, but they basically told Robinhood, we need to make money. We just lost X dollars, and you better believe we need to make money. So this is the plan. over the next week or whatever it is. And, Robinhood is just an app. I always say that all of these are just an app, and people, they're an app with obviously technology. Some have better tools, some have better this, but it's just an app at the end of the day. They're holding your positions really at a holding spot, but they're not really trading it. They're just giving it to someone to trade. And then they have your money at the end, and they give it someone to settle, and then it settles. And it's sort of just anybody can do this. You just need millions of people, and then you become Robinhood. So, there's not much difference between all of them. Citadel, you can't run away from Citadel. People think that they're going to go from Robinhood to TD Ameritrade to E-Trade.
Right.
Almost all of them go through Citadel. Citadel owns this business on this front. Okay, so when you are buying options and you pay a certain price, and then in the last couple of days, this volatility was 300, 400, 500, and the people don't care about. I always say, we don't care about implied volatility. Well, that's when it's normal. In an environment where the thing's 300, 400, 500, you have to understand the game that's being played. The minute you buy them, okay, you're paying price because you think price is going to trump. But if you're wrong 1 day, 2 days, and this happens where it goes from 10 and then everybody buys them and then everybody sells them at the same time, they make a lot of money on that IV change, a lot of money. And they make the money on the bid offer being 40 cents wide. Okay, so they're going to get their money back somehow. You better believe they're telling Robinhood, like, we're going to get our money. And maybe it's $10 per every trade that people do, or $20 a trade, but they will get their money back. You better believe it. And so that's why yesterday we said, try not to trade as much. Citadel, what was my warnings yesterday? Try not to trade as much because Citadel is getting hyper aggressive here and trying to take back some money. 1, 2, don't underestimate what the government can do at any point in time. So just be aware what they can do. I'm not saying get out of your positions. That's up to, that whole crowd. But I'm just saying just be aware. So we're starting to see a little bit of those chess pieces being moved today. And if they are, if you're leaving yourself a little bit hung out to dry, if you have just a little bit of leverage, these brokers, they have it in their contracts that you signed that basically they can take over your account at any moment and do whatever they want with it if you break one little move. So you look at GME today, the stock trades up to 500, and then literally very little shares trade down to 120, whatever. And there was no way to sort of trade around it. It was open, halt, all the way down, step down. Some stock was trading and then would just hold. I believe that the powers that be, however, that seemed to some extent orchestrated. It was like, okay, this is what we're going to do. We're going to now reduce leverage, and Citadel knows the plan. Everybody knows what's going on, and it's like, okay, we're going to sell. Citadel, I don't know, I'm saying Citadel, but someone buys 900,000 shares at the low at 120. Where's GME right now? GME is 225, so it's $100 higher. It was trading 300 just a little bit ago. You're talking about 180 points on 900,000 shares. It's $160 million or so. Right. So they're going to get their money back somehow. Trust me on that. They control that market. So you can be a mob whichever way you want, but they're using AI. They know everybody's positions. You caught them, you might have caught them, but it's right now. It's time to take a step back and not get too aggressive in just buying and selling. If you want to buy an option and but buying and selling in this environment, it's very, very difficult. It's difficult in any environment. In this environment, I want to say it's almost impossible. So just be very careful because the bid offer, we talked about that yesterday, is so wide on some of these names. So what's the lesson? The lesson is, 1, what's the lesson? When you get a win like that, you got to take something off. Okay, you got to take something off. Don't fall into this trap. Look, you learned it here. Don't fall into the trap again. Don't, because I think you did that on the SPY too, which we talked about yesterday.
I should tell everybody about
that story.
SPY story. Yes. Okay. So Felix sent out a SPY put, which ended up doing pretty well, but at the moment I bought it, it started going up. So I bought 2 lot, 3 lot, 4 lot, 5 lot, 6 lot,
which is much bigger. It's much bigger than you usually trade.
Yes,
I didn't know this. So and you tell me, what did I say? What are you doing? Okay,
it was a $2,500 position. I was like sweating, looking at it all the time, like what's happening. And at some point, it jumped up $1,000. I was like, man, if you know how Felix can hit these, they go 10x. Oh, if this can hit 10x, I'm gonna make so much money. Blah blah. It starts going down, 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 and then I break even. I'm like, oh man, what I do? I tone it down.
So you were up a lot of money. You were up a lot of money,
Yes.
and then all of a sudden, you know, you were asking me several times. I said, I don't know where the market's. Like somebody asked me where the market's going, I might say it looks very bad right now, but I have no idea. I never have an idea where the market's going. Okay, but when you tell me that you bought so much, you know, that's when I start knowing. I know because of what you did. I know that the fear of missing out is there. I know that you want to catch the big one. Everybody seems like everybody's making millions and millions and millions of dollars, and you want to catch that big trade. And I think I think take a step back and sort of understand what you were feeling. It's natural. We all feel it. We're not all robots. There's no way that I'm, you know, sitting here never going, you know what, I'm not taking some off right now. I got to keep riding this. But you got to snap. You got to figure out to snap your way out of it. And you remember what you're fighting against is called confirmation bias. You remember the time that you held on and you made a lot of money, but you forget all the times that you held on and you gave back a good amount because you just didn't follow some rules. And the minute that you start going into buying more, asking where's it going right now, what do you think, you start playing a different game than the game we're playing. We're playing a more methodical, research, due diligence type of game where we're trying to figure things out. And you know, you jump into the day trading game, which is a much different game, faster game, and you have to be mentally prepared to play that game. So those are the two lessons. So
and I mean, what ended up happening, I toned it down to 1, and then it jumps up to 200% something.
Oh, the worst. Then it's even worse, right? Because you long 5, you make money.
6.
You long 6, you make money, you give it all back. You reduce it to 1, and then it goes to a 300% winner, and it's like,
and I should have had like 2, 3 as usual. So.
And you know what? I bet you that same story happens to a lot of people because it's the crowd, right? It's the psychology of the crowd that people are, oh my God, this is going to work. It doesn't. You wind up getting out it flat. It then goes back to 300% winner, and then the next thing you know, you're just sitting there going, if I would have just kept it, it would have been $2,000-$3,000. So you're not doing anything most humans do. Okay. But what you're trying to do is cut back on that. Okay. Cut back on that. And by the way, you could actually go look at your account and look at all the trades you did and figure out, you could just count them, the ones that went to 0 that you held, or the ones that you just held too long, and just count them and say, if I would have just gotten out of that 50% or about 60%, whatever, it's like how much money you could have saved. Okay. And then sure, you get some 1 or 2 is going to actually reverse, but you know, we'll talk about that maybe later or another time. But okay. So Nokia and SPY, okay, it happens. And now you learn, and we want to, you know, give it no value. You learned a lesson, you give it no value, you're not going to do it again. I do definitely want to give the advice here again is just an overall general advice. What I see is Citadel is an angry Citadel. I see an angry Citadel by the way they're making these markets. I wasn't a market maker on the exchange. I was a much bigger market maker, if you will, for the top guys. You know, when markets like this get crazy, I'm not making them very tight. You know, if Citadel was a customer of ours at Bank of America many years ago, and, you know, we used to make markets for Ken Griffin. And when he came in, you know, we were very aware of who he was and how big he could be. So, you know, we're careful. So when the market's going crazy, you know, and you can, you know, the sophistication level on market making is not high when you're trading with 1 million people in retail, that they could actually move things and visibly profit a lot of money by just moving around the IV. So keep that in mind. Day trading in this environment is very, very difficult. Even though they're moving $6 stock is moving $2, $3, $4. The bid offer is 30, 40 cents. You have to make $1 just to make the bid offer. It's very, very, very difficult. Keep that in mind. Okay. What else we see?
You mind answering a question just real quick?
Sure, of course. Sure.
I'll pull it up on the screen here so everybody can see. Okay, do you see it?
I'm holding a 5 lot of the Jan 2022 5 calls in Nokia 37 cents yesterday. Today's America has them at $1. What to do now? Yeah, you know, it's the same thing. You know, was this P434 win? You know, I would say to you, you know, at Options Geek, first thing is we're talking about the process, but half the story and half the battle is the plan. So my question, when I see that, what you're asking me, what do you do? I'm asking you, what did you think you were going to do when you started the trade? Because if you don't know that answer, then that's where you're lacking. That's where I tell you, go to 3 Steps of Profit, go to, winning picks. Like that's the education. We harp on exactly that. What are you planning to do from the get-go, so that when it happens, there's no, oh, I think it's going to 40. There's no, we're not trading what happens in the future. We're trading the plan today and saying, okay, if it gets to $3.50 or 47 cents, then man, you should have taken, I'm going to say at least 1 or 2, at least, it just depends on what you thought. The 37 cents to, what was it? 37 cents to
330.
To 330, you're talking about almost a 9 times your money, right? 900%.
Wow.
That's incredible. Look, it happened. Nokia is also a very thick stock. So, when Marco was talking about it, and trying to take Nokia and move Nokia, it's much different than trying to move, one of these small cap names, low market cap, $1 billion. Nokia is much bigger. Same thing. We're going to talk about it later. The American Airlines. Understand how big the company is, because you're going to need money. The bigger the company, you need more to move it. 37 cents to 340. I would say you should have sold some. The reality is right now you didn't. Your question is, what do I do right now to have it at $1? What does your mind say? Did you think that was going to happen? Did you anticipate that happen? If you didn't, again, it's about here. It's how are you going to deal with this if you sell? My advice is always, if you're thinking about it or worried about it, sell a 2 lot, put an offer there at, I haven't looked at where it should be, but put an offer there at, $1. They might be mid-market on a 40-cent wide option. Maybe it trades up a little bit at the end of the day, and maybe you throw out maybe you sell one at $1, and then you leave the other one at $1.25. You still make 3-4 times your money, 2-3-4 times your money, and you're still in the game. But your mind, just by asking that question, is your mind saying, get me out. Like, this doesn't feel good. Something's wrong. And you don't want to be, it's a Jan 22. You got 11 months to stare at the computer, and you're going to literally stare at it every day, hoping that the same move goes from, that is a mountain, if you will, right? If it hangs out here for the next couple of days, what you just saw there from 3 to 10 is a mountain. And when it gets to the other side of the mountain, you see Bitcoin. It took 2 years before it started shooting back up. So you might be sitting there for a long time watching that stock. That's my 2 cents. Stick to the plan. Find a plan and then stick to that. Go ahead. Any other questions?
Cool.
No. Why don't we tell people we're going to go over today? So we got we have the airlines, silver, General Motors, and then we can answer some questions and whatnot. We have a couple other smaller names that I see. But go ahead.
Mm-hmm. Cool.
Want to talk about this American Airlines?
Yeah, for sure. Yeah.
Okay, let's talk about the airlines.
You want to show us what you?
Yeah, we were talking about the airlines. They were buying some calls in some of these airlines a week and a half ago. The stocks have not traded great. AAL did today. But let's look at. All right, so you have this move. The first thing I would say is when they attacked this stock this morning, it was traded well yesterday. When they attacked the stock this morning, you could see it happened, pre-market. And, the big guys don't really trade pre-market. So some of them have in their charters that they can't even trade before a certain time. Some just don't trade within a certain time. Some start at around 10 o'clock or so. So when I saw this move, $5, that's like GME moving, $100 as well. That's like a humongous move. That's going to draw out sellers, right? There's, let's figure out. Let's just see, right? There's holdings. I'm looking at holdingschannel.com. Just click here, American Airlines. Oh, it's faster today. Okay, Vanguard is probably an index. That's probably not, somebody that's going to be selling. But you got like BlackRock here, State Street. There's 70 in the top 10 names. You have 70 million shares, 60, 70 million shares. Maybe even 80, 20, 30, 80 million shares here. what if they sold you 20? You want to buy this that bad up at 22, up $5 on not that much news, and really it feels like Wall Street Bets is coming in. They could sell you 20 million shares, no problem. 20 million times $20 stock is $4 billion. So you got to have $4 billion of firepower to actually, push that. Are other institutions jumping excited about buying AAL at $20, $21 after it was trading 16, 15 in the last 2 days? Yeah, I wouldn't say that people are just going to be jumping at that. And you're trying to push the shorts over the fence here and over the cliff. It's a tough game, and don't think that you could do it on every single one. You still got to get a stock where the longs haven't been there looking for this type of move. So at 10 o'clock, maybe it's BlackRock, and they say, we own X number of shares. Some is BlackRock, just to throw one person in there. BlackRock shows 30 million shares. Go ahead, sell them 5 million. 5 million is $1 billion, right? And they'll sell it to you. You're gonna knock it up on nothing. So this is where it's a little bit tricky. The game of knockout. You call this game knockout, right? You're trying to knock the hedge funds out. You're trying to knock the big players out. It's very difficult. And then on top of that, I'm sure in AAL the volatility is down, up. Okay, let's see where it was. Up because it's had such a sharp move. Are they still buying here? Where was it this morning? Should have been a lot higher this morning. Let's see here. February. Yeah. It was 145 this morning. So, gets to 145, 150. The volume is trading around. Looks like they got it early. So they got it early, and then there was more volume up here to 140, 150, and then come straight down. So net, if I'm selling vol. Okay, you got me here. I'm selling here. They're taking the stock up, but then I'm also selling it up here. So, and I'm assuming these were both buys just because the stock was up so early in the morning like that, and people probably jumping. I haven't checked, but that's what I'm assuming. So I would say you're playing. This is maybe a little bit different game than GME. There's a lot of institutional holders in AAL, excited to get out of $20, at least on some, not completely, but, throw a couple of million shares, 2 million shares. How many billions of dollars does Wall Street Bets have? They've made a fortune in Tesla. They've made a fortune in GME. How much billions do they have? How much firepower do they have? That's important that somebody's probably, calculating those numbers. Like how much money do we have as an army, as a group? I mean, they're essentially, why wouldn't they be a hedge fund, right? They're trading 20, 30 names and they're getting in and out of them. Essentially Wall Street Bets is, why not? It's another hedge fund, and it's a hedge fund to be reckoned with that is in and out and pushing things around. You got to respect that. There's nothing else to say. You just have to respect that. Win or lose, their whole thing is, I'm in it to win it. I don't care. This is money I don't care about. Someone commented, he said it fair. There's nothing to say. I usually spend $7,000 a year on me, and I throw it all into GME, and I made 3-4 times my money. Who could argue with that? Like, who could I got COVID. They locked me in my home. I couldn't do anything. So you know what? I threw 7,000 to try to beat these hedge fund guys because they're short these names and in the crowd. Who could argue with that? I can't argue with that. That makes sense to me. If you were going to go on vacation and they locked you down and now you're pissed off and you want to join a mob to try to take down who am I? There's nothing wrong with that. I don't think there's anything wrong with that. I don't think there's anything illegal about that. We talked about what could be illegal, but I do worry when I hear it's not about the money, because, you take 50 grand, you turn it into 500,000, and you take 500,000 and you turn it back down to 50 grand. You know what? It's when you're back down to 50 grand, you start thinking, maybe it was a little bit about the money. Like I could have used it for 50. And so, that's the only thing I would say. I'm not in their shoes. I have kids and a family and bills, and some of these guys, they're saying, there's a great video that someone put out on the Joker, it was a video of the Joker clip when he shoots Robert De Niro's character on the thing. It's a really, really great clip. I watched the whole thing from the beginning to end. It was awesome. I thought it was very funny. And it was like, hey, you know what? I didn't have anything. I was making minimum wage. I don't got anything. You know what? But if I can take a shot with the crowd to try to take somebody down and I'm making 20, 30 times my money, this feels great. Okay, there's nothing wrong with that. I can, that cannot argue with that, but there's something to be said about maybe taking. So you won this fight if there's, whether you get out at 1,000 or 500 or 350, you won the fight already. You won this fight. Do you want to win the battle? Because if you want to win the battle, you got to take some money off the table, and then you can go attack the next one and go get the next one and go get the next one. And you can move, quickly and nimble and try to, that would be the battle. This is, if you're going to make this one stock, the battle and the war, you're putting a lot of chips in one spot. You could win, but now, it's the Big Short. In the Big Short, the guy's taking the banks down. This is a great great lesson too in the Big Short. So when I watch that, I look at it differently. I look at it from experience. Here's a guy that made a big bet. His risk reward was, I'm going to risk 50 million or whatever it was to make $1 billion and a half. Okay. That's what I'm going to risk. All of a sudden, everything tanks, and 50 million turns out to be 400 million or something like that, 3, 4, 500 million. And he's sitting there stressed, and his trader's like, hey, boss, like, we got to get out of this. We got to get out of this and actually take our money, because if the banks go down, we're in bankruptcy and we may not get our money for years. Even if we get our money, we got to split it with everybody else. And he says, you know what? Screw it. I'm going for it. That might not be the best decision, right? Because at that point, you have 400 or 500 million on the table to make 400 or 500 million. It's a flip of a coin. You're literally flipping a coin for $500 million. Maybe a little bit more if you really believe that it's going to go down, but who knows how it plays out. Look, he wound up making the big money and it worked, but it's just, lessons to be learned. So let's go through some of the names that we're seeing. So we're seeing the AAL. I would just note that a lot of this seems like you would think they're closing, but actually when I see this here is, the 18s to 20s, these things, they look, it's hard to tell exactly what they're doing, to be honest, but it looks like possibly buying in the morning when they came in the morning, and now they've bought at 20 and a half. Maybe I don't know, maybe they bought some more here. I'm not sure. This one is very difficult to tell. It looks like in the morning they did sort of at 100, 16 at 100. To be honest, they might have sold it right on the morning. They might have sold this because the stock was up, right? So they might have taken some profits here. Right. And then somebody else came in here, or maybe they took some profits and then they sold here. I'd have to go back. This actually might be a sale just because there were people buying these things because the stock was so high. So that could have been a sale, even though it looks like a buy. It could have been a sale. See, at 9:30, the bids are high here. Yep. So if somebody was setting up for that and they were long 10,000 options, I would sell half right on the morning. Went up a little bit more, goes through, I would sell half. So to me, it looks like a sale. Citadel might see buying. And so once the sellers are done, they actually raise the vol up in case people want to play. So again, it's being very aggressive, and you're starting to see these IVs move like wherever they want them to move. So once you get out, they knock it down. You get in, they're raising it up huge. So this is the invisible cost that we talk about. So what else are you seeing? UAL?
Yes.
All right, let's just look at UAL. And Delta? What do you see here? This?
Yeah, I think was it
5,000 puts?
Yeah, it was some puts.
3,500. Okay.
Right.
Looks like a spread. Maybe some type of spread there. Okay, let's just look quickly. 35 here. Spreads. Okay, so spreads 42.31. Okay, so I'm looking at the spread. I'm looking at 63.5, paying 630, and where is it? 2,500. $3 to make. Which one? Which is this? 35. So $7, 3 to make 4 over the course of a month. Sounds like it looks like it's a roll. I don't think it's not exciting. Would you pay 35.28? The most you can make is $7. Would you pay 3 to make 4? No. So it doesn't. People would not do that for a 1-year option. So that to me is not an opening trade. That to me is somebody who is long these. They long the 28 puts, and then they roll them up to these here. Okay. That's what I would say. The other thing I would say is in some of these like UAL, there's probably bonds out there, and so sometimes these trades could be what's called a capital structure trade. You see how BlackRock is long, sometimes you'll see that in AAL we sort that they're long bonds. Sometimes when you see these trades like puts, it could be that they also bought the bonds and they need to buy puts against those bonds because, obviously they're getting a good interest rate. So capital structures, you buy bonds, you get an interest rate for so many years, and then you buy a longer term put to protect that interest rate. And just in case it goes, bankrupt, you're buying the bonds at such a good level that you just don't want it to go to bankruptcy or close to bankruptcy, which is where they were a little bit. So we'd have to see where the open interest was trading and when that traded, but it looks like somebody just rolled up for $3. Okay.
Cool.
What else?
We have one more. It's safe,
but
it looks like some sort of a calendar spread. Nothing too exciting.
Nothing too exciting. Okay, we'll skip that. Let's go to what I think is more exciting. I think silver.
Yes.
I think silver. I've been seeing ridiculous volume in silver over the last couple of days. The story, I think the story is very similar to what a WallStreetBets type of story. So I see there's a lot of volume. Silver is a name that you can look it up. There's awesome stories. There's a lot of people saying that the investment banks, JP Morgan, they're manipulating silver. And there's people that have written about it. There's videos out there how JP Morgan is manipulating silver, how the derivatives, there's a problem with the derivatives that the futures, if someone tries to corner the futures and actually ask for delivery of silver, right? Because when you buy a futures product, what you're really doing is saying, I'm going to buy something, an asset, whatever it is, corn, orange juice, silver. I'm going to buy silver on this date, and I'm going to buy all these futures. And then you buy these futures, and on that date, you say, I want to take delivery of all that silver. I want to actually buy it. There's not the idea is that there's not enough silver to give you in order to meet the demand of that purchase. And so, excuse me, the person who is short the futures and has to sell you the silver, the idea is that they would go into the market and actually buy the silver in the market, and prices would go up. So that's silver squeeze. There's stories of how these brothers, I can't remember the name, skips my mind right now. The brothers, what are these guys? One of these brothers, they actually cornered the market. The Hunt brothers, they cornered the market back in the day. Awesome stories. There's a lot of stories about silver, and potentially that there could be a short squeeze in silver, also gold, but silver is a hot one. And you can look at the chart in silver. And what does it mean? If silver goes up, all these mining stocks go up. So we're seeing call activity in a lot of the miners as well. So you're looking at something like, April, May, June. This is a straight shot up. You see that? Right? Straight shot up. Let's go back a little bit further so we could just see. Let's just do it this way. We'll do a weekly. Just get an idea. So you see this move here, COVID down. Okay, so let's just erase this and push it up like this. Okay. This looks pretty constructive, right? It's made its big move, 20 to 27. This has found the floor. We're around here. It's creating this flag, breaks this and it goes. What's going to cause it to break? I don't know. But the MACD is also cooperating. MACD is cooperating, coming down, and the flag is holding. So this looks good. It almost looks like, remember the Palantir that we were looking at the other day, right? It's like it holds when something's holding and this is coming down. This is allowing the next move to have a lot of power, a lot of, I joke around and say oomph, a lot of strength. So I think that there's something here. If we go back monthly, just to get an idea of, silver, silver every, call it decade, has one of these types of moves where, look what happens here. There was a squeeze here in silver, right? What happened here in silver was there were so many people in the ETFs that were buying silver here that people were concerned was concern that the ETFs was bigger than the actual silver market, the availability of the silver market, because you're trading 2.5 billion shares of ETFs, right? Times 40, $45. You're talking about $100 billion. And, was the fund able to hold $100 billion? Once you get that high, the futures that need to be rolled each month become, a lot for the futures market. So this is similar type of rumblings that you were hearing around here. And if it triggers, you do get this type of move. It's very possible to get this type of move. This was a move triggered by ETF buying and futures buying here. So somebody is out there probably on WallStreetBets talking about, this sort of dynamic. And I would imagine that there's some sort of, they have some events. I don't have those events right now, but I'm sure we can dig in a little bit and come up with what might be the events. But let's take a look at, so that's silver. What are they buying? Over the last couple of days, they've been buying these 27s in February. So this open interest, 26s, 27s, 25. All of this is like the last couple of days. It's just been significant call buying. The 30s here taking a shot at 30 cents. March, they must be either pointing to something. I don't know if there's an event or something that might. Right here, first news story. Silver stock news is a Reddit silver squeeze. What does it say? Is a Reddit silver squeeze targeting AG stock, other mining stocks? So they're talking about it, and it would make sense. It fits what they're about. The investment banks, manipulation. They've been shown they have paid many fines, so it's not like they're making it up. I mean, the investment banks, JP Morgan specifically, has paid probably billions of dollars in fines over the last 10 years on just in the commodities markets, and from whether it's spoofing or market manipulation or whatever. They pay the fine, nobody hears about it again, billions of dollars, and they keep moving on. So it's not like I'm not saying anything that's not out there, but that is the story. There definitely is a story. AG is one to look at. They're buying calls here, okay, and I see actually. So I saw this one here, all the different strikes yesterday and today. They're buying, and really over the course of the last call it 3 weeks, they've been buying here. Frankly, I'm frustrated. I missed it. I did see it over here, and then it came down, and then I got a little nervous. It's like, what's really going on here? Because it stopped here, went back up, and then obviously this happened. So this was, they've been buying calls since about here, actually, since about here. 11, right around here, they were buying calls. That was at the end of December. Okay, so they were buying calls there. They continue to buy calls now. The stock jumped and came back down. There was an announcement today. This is the level now, 1470.15. I'd watch that, to see if it's real. This is large volume, so that's good. But yeah, I mean, they're loading up on this one. I think in these, I saw some puts in here. I think this was someone selling out of these puts. You see how the vol came down to, 45,000. The vol comes down to 70 there, and they 50 cents. So looks like somebody sold them, and then the stock jumped. Somebody sells puts, that puts upward pressure on the stock. So they sell them, and you see the stock kind of going that way. It looks like they sold them. So someone got caught in that, long puts, or maybe they were long stock and they sold their stock and then they sold their puts, afterwards. So we don't know, it doesn't mean that, hey, they're long puts, but they could have been long AG, and people have been long this stock for, we were long this stock for a little bit back in the day and a few months ago. And so I like the stock. I like the stock. I wanted to get in, got a little nervous on the timing. But I like the stock. I think this one does have legs, and if SLV goes up, this stock could. The reason I like it because I know that if SLV does go up, this stock, these miners are. Excuse me, these miners, the way they trade is. I mean, it's simple. It's a simple business. They have silver. It's in the ground. If the dollar amount of silver goes way up, their costs stay the same. It doesn't. Tractors are still costs X, this machine costs Y, and we're just going to dig more and get it out, or what we have underneath there is more, or, I don't think they tell everybody the exact reserves they have underneath the ground. I think there's always wiggle room. They want to keep showing that, oh, we found a little bit more over here, or there's a little more than expected, so, there's always a little bit more, unless it's fraud, and then it's a lot less. But, I think something like silver, which is one of the better ones. Also, this one, PAAS, is another one that you should look at. Stock was up, traded for 38.5. Now it's trading 30. But this is another one that is very much on the move when silver moves. So AG and PAS, definitely ones to watch. Definitely, if you like silver, you can buy the ETF. I think that I would suspect that WallStreetBets is trying to get people to buy futures in silver, because that's the one. I don't know how people would actually call it, because you actually have to take the delivery of the product, but that's the one that can cause a little bit of mayhem. It's the futures. Futures is directly tied. You're trading against the big banks. You're trading against JP Morgan. ETF, it's owned by BlackRock, and who knows how they're rolling it or what they're doing. It's like the oil ETF. If the roll becomes very big, that's the other way they manipulate it, right? In order to roll your positions, they make it so big that it costs so much money to roll. So right. There's a lot of stuff going on there. It's not GameStop. This is, everybody's short, and if we could just push them, we're going to push them. In the futures market, there's these rolls, and you either have to take delivery or have to roll the position. And, most people don't have the cash or the warehouse. I mean, it's not like they're going to mail you a silver to your door. I don't think. To be honest, I don't know, but I think you got to have some warehouse where you're going to store the silver. They're going to say, okay, we're going to send you silver, and it costs X thousands of dollars, and it's a block. I don't think you want UPS, holding your block of silver. It's like cash. So,
right.
Those are silver trades that I've been seeing, and they're really coming after it. So it's maybe the sector that it has a good story for that. For the WallStreetBets crowd, of us versus them, manipulation in the markets for a long time, fines being paid, bankers doing the wrong thing, JP Morgan hiding the fact that, these are all, call it conspiracy theories, or just what people are writing about, or people saying, I would advise people to go, if you want to go down that rabbit hole, there's enormous stuff on Google that you could find. Okay.
Mm-hmm. Okay, cool.
Awesome.
Cool. What about, did you see the news about GM that they're planning to, have all EV cars by 2035?
Yeah, I saw a little bit of that. I just saw it passing. So, I mean, look, I think I love GM. This is a stock that I think I think it's positioned so well. And I think that it has done nothing for so long that, people are going to start appreciating the assets they have within the company. I didn't make up the story. I knew this story for a while, because I follow David Einhorn, and I respect David Einhorn. It doesn't matter what his returns were. The guy is wicked smart. He's so smart. And he tried to become an activist in GM and do exactly what they're doing now 3-4 years ago. I mean, so he was ahead of his time. I think he sold out. I'm not sure if he's back in, but he did sell out. He was out of position. It looked like he took a loss. I mean, he was going through a time where nothing could go right for David Einhorn. But that doesn't mean the guy's not really, really, really smart. It's just, he had the right idea. He tried to be an activist. He tried to tell GM to do exactly what they're doing now and unlock all this value. And we're seeing it happen now. So I love this story. This is a story that is owned by a lot of hedge funds. And by the way, it brings to the point, the stock traded down along with, talking about, look, they're buying calls. There's nothing to be said about GM except they are buying back these calls. They're playing the earnings. They're playing, movement here. They have been for a couple of months. We are involved in GM. You're involved in GM. And so, I like the stock. Does it mean that I don't take profits no, I mean, that is the game, but you can let the last third for sure. If there was one to let ride a little bit longer, this is one that, for me, it's a personal, I love the story here. I love what they're doing and how they're trying to turn it. They have a lot of, they don't even have the momentum they have, but if they go and split up the company or do something like that in the next 3-4 weeks, I'm telling you, you could see this stock really explode. But whatever. That's just my 2 cents. The same type of story where hedge funds might be liquidating a little bit is Pinterest. Love Pinterest. Love it. The stock hits 63 and, rises and goes through, comes back towards 70 here. But, who owned Pinterest? Well, go look. You have Melvin Capital has had 12 minutes. I showed you 12 million shares plus calls. Well, they probably had to pare things down. Okay. So you had stock for sale there. You have Maple Lane. They owned, I'm pretty sure they owned Pinterest. It's a great name. You have a lot. It's a great name. A lot of hedge funds were long and they had to sell because remember, they're losing on one side. They pared down the other. You can see the same thing going on today. When GME was down huge, what were all the other momentum stocks getting killed? Right. Then GME goes back and people are like, all right, I'll stay in. So, portfolios, that's how they work. One stock can knock out, not completely knock out, but make people lower their risk on everything else. So people just say, damn, I don't want to lose all my money one shot. Let me just get out of some of this. I'll keep my GME. Something like that. So we're seeing the same dynamic here. Pinterest, love the stock. Loved it yesterday. Loved it the day before. I love the stock. I think it's positioned well, has momentum, has a nice growth story in front of them. I think that they should be bought out by someone. It's really exciting to me, this stock. I'll tell you another stock that I like. Frustrated, it was, look, we had it here at 91. It went to 94, 95 quickly. And they have a great story here. This is another one that possibly hedge funds getting out because of their long or their short, the GME. This is a solid story, Activision, ATVI, solid story, transformation story, revenues going up, margins going up. It's like, how do you value that? It's hard. It's definitely hard. And they've only have a couple of quarters behind them where they're doing that. You do that for another quarter. They post another quarter like that. And the stock could actually, right now you're able to get options here at 35. Look at what you're paying on all the other names. You're paying 70, 80, 100. So these options are still saying, hey, we like it, but meaning the market's saying we're not giving it a lot of credit to gain so much momentum, but post another big number like they did last quarter and margins going up plus revenues going up, forget it. This stock starts catching wind. So one I'm looking at, I'm a little frustrated. It traded 88 yesterday. These things are moving so fast, but when people are selling, forced sellers, it's different. People forced selling is different than the whole market's down. And, the whole market was down because of this sort of maybe small instability or the thought of instability. The minute it recoups, you see some of these names come right back. So, any other questions from people?
Yeah, there's one that I found interesting. I looked it up.
Go ahead.
If you want to take a look at the screen, there it is. There's the ticker.
Okay.
Real.
Maybe you can look at real. August 20th, 25 calls look like there's a buyer. Real. Okay. Lewis. Let's take a look. Real, August. Yeah, I like this. He's got a good eye. You got a good eye there. Yeah. What the hell is this? Real. Bear of the day. Real.
They say it's like secondhand luxury goods.
First ever luxury consignment.
Right.
Then I see investigation initiated by former. Okay, I'd like to see what that is. Okay, so let's just take a look. So August 25 calls, 10,000. It does look like a buyer. It looks like they came in here. So let's look at 1050. It doesn't trade much, so you could see nothing traded up until that moment, and the stock jumped. So yes, we're seeing volume. So let's just look at it. We're seeing volume. We see the implied volatility increase with that volume. They're buying calls. We see the stock jump with the call buying. And we see that prior to it, there was really nothing going on until the buyer comes in and takes it higher from 23.5 to, let's call it 26, the stock jump. So $2.50, almost a 10% move. So if we look at the premium they paid 548, 593, going all the way up until, wow, this is a decent trade. I mean, a decent sized trade for this name. And it looked like they're just coming in. Like, look at that. It's like a computer. You see how this is every minute. That's a computer. And at some point it looks like it went up enough. The IV has gone up enough. You could see how it gets up to a certain amount, and then it starts trading near the bid. But this was likely a buyer, and stocks going up. So I would say real. I don't know about it. So what is it? Luxury.
It's like luxury secondhand goods, from what I've
Consignment.
seen.
All right, so we'll dig in that sort of in a second. But let's take a look at sort of where this is. You're talking about $25 stock with the stock trading 22 at the time. So you're paying $8-9. Let's call it around. I mean, this is going to be very high, but 55. So with the stock 23, I would reduce that a little bit to, let's call it 50. So 25 to 25 to 25. Yeah, that's probably closer. So let's just call it 50. Can the stock get to 50? Is this a new IPO? Okay, so it's a new IPO. March. Okay, started taking off here late December and took off here. So is there news today? Like, why today? I guess the question is, so somebody asked me about doing more of the story, and I can tell you the reason we don't do so much of the story. We could talk about it, and ultimately we want the group to add to this, but the looking for the story doesn't make for great video. I can sit here. What I do is I actually read. So, when this is done, I will go read the earnings transcript. So I'll tell you what I do. I would read the earnings transcript. I would actually go to see the news articles, what's happening. I would try to figure out two questions. Okay, very important. Two questions. I would try to figure out, how does this company make money? I know we know luxury, but like dig in a little bit deeper. How does it? Do they sell them wholesale, or do they have stores? Like what is it direct to consumers? Is it just online? How do they make money? That's one. And then two, why is it exciting right now? What makes this company exciting right now? And that should get you to understand what the story is. I see Tony's writing, because I see, how important is it to know the stock story as opposed to just, what was that question? How is it important? Are you already typing? How is it important to know a stock story as opposed to just looking at the technicals? Well, it's a great question. Let me go back to tell you what I would do. I would basically answer those two questions. I would go to the transcript. I would go through the stocks. I would actually go to Twitter, stock twits. I would go through just briefly. But is there anything here? People saying anything? I would go to WallStreetBets. Are they talking about this? Like, why today? Why right now does somebody come in and buy real that nobody ever trades and just come in today? That's really what I'm trying to figure out. I then we did we're taking a quick look at the technicals. Okay, we're doing our technical analysis. Can it get there? There's not much data, right? There's only 6 months, 9 months worth of data. So, that's going to tell us part of what we're the trifecta. So we're looking at it. It looks interesting. It's starting to catch a bid. I don't know why. Now we go to the story. We do what we said. The story is important. The story, once you learn the story at a high level, it has to, you have to think about it making sense. Does it make sense that this could jump up? Does it make sense that this is what I need to know in order to make a decision? Is it earnings, right? Because I'm now looking at the date that they bought, right? Let's look at this. I'm looking at the date. They didn't buy March, okay? Earnings might be, look, at the end of February. They didn't buy March, okay? So that's, buying August, and we don't talk about this enough, but buying August is a clue. It's a nugget that this person has given us, and we have to understand, why is he buying August? Why would somebody buy August if they were playing earnings for March? Wouldn't you buy March? You still get 3 weeks after the earnings. Wouldn't you buy May, right? Why does someone say, I'm going to pay 40% of the stocks, what the stock is valued? I'm going to pay 40% to buy 10,000 of these. You have to think about that question. Why? And I would say that it's probably not earnings. It's probably someone that might want to start a big position. So I might go here and say, let me see who owns this stock. Okay. BlackRock is the number 5 holder. Vanguard, number 4 holder. Maybe there's someone like them. Go look at BlackRock. They're usually the number 1, 2, or 3 holder on every stock. So maybe they want to get up to where Fidelity is at 12 million. Maybe they want to get to to 10 million shares, and they know that they're going to push the stock up with 10 million shares over time, or they're going to be bid, and the stock is like, I don't know, but it shows me, it makes me like it. I'll tell you that. I mean, I don't like paying $8 for an option or $9 for an option when the stock is $26, but for some reason they're doing that, and I would say that's a clue. That is absolutely a clue that we're looking at someone paying 40% for this call. Now, again, why would they do that? I'm surprised. I'm surprised, but that's what we're here trying to figure it out. I like it. I don't like reaching when the vol just went up 25 points today, and they just took this price from what you saw, $6 to $9, and the stock is up $4, 20%. Give me the stock back at 23. Have another bad day in the market at 23. I'll take a look at these again. But this is an interesting one. It definitely makes the cut to watch. I want to watch this. I'm curious about this one. This one's making some sense to be long this one. The problem is I just don't want to reach. I don't want to pay, if I'm going to buy, if they're looking at 50 and I can buy the 35s today at 6. So 6 to make at 50, it's going to be worth 15, 6 to make 9. That's not exciting. That's not exciting. So that means that these guys are doing something here. I suspect they think 50, 60, 70 plus. Can that happen? Is that something that can actually happen? Now, it's going to take a little fundamental work. How do we get there? Is it a momentum stock? What are they in? What are they doing? All that stuff, all that good stuff. Can it actually happen? Who are the competitors? What are the competitors doing? Can they be valued like a competitor? So these are the types of things. I do see, I got to tell you, there is, bear of the day, real, like there's a lot of these like negative articles and a lot of things that might not make for a great story, but sometimes a very bearish article is also bullish if the stock is up, because the market is, once a negative article comes out, it's like when Citron and Andrew Leff comes out and says it's a fraud and the stock goes from 20 to 18 and then it doesn't move. And you already said it was a fraud. You've already created this image that it's a fraud. Well, fraud means 0. So if it's still at 18 and everybody knows that you said it's a fraud and they've looked at it and said, I don't really think it's a fraud, then 18 can turn into 100 like GSX, right? Mm-hmm. Everybody claims, in the Muddy Waters research is claiming GSX is a fraud. It goes down 10 points and everybody, he has so much information, videos, and it looks so clear. But then you look at the stock and you just wonder, it's not going down, and that's where, again, story meets the options volume meets technical analysis. I don't want to buy puts in Palantir because the story is negative, because there is some put buying and the open interest on the puts is high, and the IPO is coming up, and I don't want to buy it because I look at the chart, and we did it here. We look at the chart, and the chart is not going down. Mm-hmm. Right? So the market is absorbing as much as it can. You have to think and rethink and try to be 2 steps ahead. Mm-hmm. Cool. So it is important. The story absolutely is important to add flavor to the process and to make sense. Okay. We look at things like any one of these stories. You pick anything, tell me the story. If the story makes sense, and it's Futu, buying calls. There was some call buying. The chart doesn't go down. Chart has a big flag. And then what's the story? We don't even know. It was like the Futu is the Robin Hood of China. That's easy. That's a good story. What's the market cap? 6 billion. These are types of things that I think people should they should see. They should look at the 3 different parts separately. Some people, I don't want you to go from one. See, what happens is you go from one, and then that gives you bias towards the stock. So you see call buying, and then you start seeing a call buying. You see the stock. You see the technical analysis bullish, and then you say, okay, what's the story? What's the bullish story? I'm really asking you to try to erase your memory of what you just did in the options. Write it down, bullish activity, then erase your memory, then go to the technicals and be honest with yourself and say, what's happening here? Write it down, erase that, and then go to the story and go, what does real do? What does any of these stocks do? Okay?
Okay, good.
All right, good. Tony, that was a good question. We can, whenever you have questions like that, you can ask.
Great. All right. Well,
Anything
thanks,
else?
Felix. I think we're
Is that it?
running out of time. Yeah.
Good.
And if you want, I can squeeze in another one. And
If somebody has something, it was, you know, they
Yeah,
can.
I like this question actually from VAAB. Here you go. Here's it's on the screen.
VAAB. Okay. What's your opinion in buying or selling options the first hour of trading? I find it lousy time for me. Yeah. Okay. So listen, I can't I can't tell you how important it is to go watch this Robinhood video we have on YouTube. It's a 3-part series. I can't tell you how important it is. It might be the most important options video I put out there, and I put it for free. Okay. You have to understand the shenanigans that are being played by the market makers at all times. Okay. It will help you. When I built 3 Steps to Profit, every video I had a purpose. And the purpose was, in every video, how does this help someone make money? Or how does this prevent someone from losing money? Prevent you from losing money is the same thing as putting money in your pocket. And so, you know, the shenanigans that go on by the market makers, and by moving the IV up and down, by making bid offers wide, by moving, you know, you're trying to sell into the money option and the bid offers wide, by understanding where to actually sell it. These are things that are important, are very important to understand, and they prevent you from losing money. So from 9:30 to 10 o'clock, it's an awful time to be trading so much, because the things are moving so fast and so far, and the bid offers are wide, and they see you coming like everyone else. They see you coming, and it's the invisible cost, which it's hard to explain. It's hard to really see, but you feel it. It's the invisible cost of Marco's walking into my store. Now he's got 10 friends. I'm looking out the window, and he's going to buy widgets, you know, and I see him, and every time he comes in, he's a buyer. So I kind of know now he's made some money, and now he's got 10 friends that are going to come. Maybe it's 100 friends that coming in. The bell rings at my door, and what I do, the widgets usually cost $1. I just turn the thing, or chalk it up and say it's $5 now. You know, and Marco says, I don't care. I'm so excited about buying this widget. I'll pay the $5, and all my friends are here to pay the $5. The minute you walk out the door, it's like, turn the thing, and I turn it back to $1. You know, and in a way, that's really what's happening here. But to see it and feel it, you're feeling it because you're trading it. But it's really an important video, that Robinhood parts 1, 2, and 3. Look, if you're an intermediate, if you're an expert, you could skip to 2, 3 just to get to the point. I'm doing that for the beginner to show people. Everybody thinks they know options until you ask them 1 or 2 simple questions, and then they don't know what you're talking about. So I'm trying to go baby steps, part 1, part 2, part 3, to the conclusion of how do you actually, combat this, right? If we know they're doing this, how do we help ourselves? Well, part of it is a little bit of restraint and not jump in there so quick. Okay. Unfortunately, that's a little bit of the answer. Okay. Awesome, man. All right, man.
Great. I also linked the video in the chat, so you guys can take a look at it.
Okay, good.
Thank you, Felix. Great session.
Awesome.
Learned a lot, and thanks for helping me fix my mindset a little bit.
Good. Take your stops. Goodbye.
All right. I will. All right.
All right.